Nasdaq 100 started the week having yet another go at the 19630 resistance level, as shown in the daily chart, which, like most of last week, held again. That led to the breakdown lower on Tuesday, when US markets reopened after the Labor Day holiday. The AI favorite Nvidia brought down the megacap tech index, with the stock falling 9%. This comes off the back of the problems discussed in the last video, that Nvidia has set such a high bar for itself that it is likely to underwhelm expectations. We're seeing that reaction in the stock this week. In addition to Nvidia, concerns about the US economy have re-emerged, with the US ISM manufacturing PMI reaction in contraction territory and missing expectations. Weak economic data was what triggered the last wave of selling before price made a low on the 5th of August. Wednesday was the same, weak economic data, with US job openings missing and private payrolls report coming in weaker than expected. However, it was a muted response after Tuesday's big sell-off. We can see from this chart how the US job openings have been trending lower over time, suggesting the labor market is weakening. Yesterday was similar to Wednesday, with price failing to hold any gains, which set up today's sell-off after the monthly jobs report continued the bad economic data theme, with August payrolls coming in at 142k when the expectation was for 161k. Yields dropped as traders priced in a 50% chance of a 50 basis point rate cut later this month by the Fed. We're also in this weak seasonality period, as shown by this chart by Goldman's, highlighting that the stock market historically performs badly during September. So brace yourself for volatility in the coming weeks. We mentioned in the last video that by price holding this upper trend line in blue, at the start of last week, a breakdown was in process. That's been confirmed this week, with the Nasdaq heading for its worst week since April, finishing lower by 5.6%. Levels to watch into the close and next week. Price is now actually below the 200-day, which sits around 18,569. That's significant. Watch to see if price closes the week below it. Support is this key trend line in black, around 18,330. The last comeback rally was when this trend line was confirmed as support on the 9th of August. So keep a close eye on this level. If we breach this level, we could head towards the lows from the last sell-off, around 17,575. Resistance is 18,925. Next week we have the latest batch of inflation reports with US CPI on Wednesday and producer prices on Thursday. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content. And I'll see you at the next one.